Hello all to Verizon Stock Intrinsic Analysis video. In this video, we'll go over the reason that this stock is undervalued and why this year could be a great year for this stock. But before we get to any of that, I want to remind you that this video is not financial advice and is for entertainment purposes only. The source of all the data that you see in this analysis report are Verizon annual reports, which contain the financial statements and so much non-financial information about the company. I usually download these reports from the sec.gov website, and today I want to show you another way to find these reports. You can find and download them from the company's investor website directly. So if you type in Google Verizon Investor Relations and click over here, this website is dedicated to the company's investors. And here you can find the annual reports, news about the company, and the earnings calls. Going back to the analysis report, Verizon is one of the world's leading provider of communications, technology, information, and entertainment products and services to consumers, businesses, and government entities. The company has one class of stock, and the ticker symbol of this stock is VZ. They report their operations in a calendar year that ends on December 31st, and every annual report for this company or any other publicly traded company should be audited by an external accounting firm. And this year's auditing report gives us the green light to trust the numbers in the financial statements. So as usual, we start by looking at the last year's revenue. The biggest chunk of Verizon's 2022 revenue was made from the consumer segment, that is 76% to be exact. This segment provides wireless and wireline communication services and products to individual consumers. The second segment provides wireless and wireline communication services and products to business and government entities, and it's about 23% of 2022 revenue. Next, we want to compare Verizon's performance year over year. We can see that the revenue is slightly increasing since 2020, and the cost of service and the total operating costs follow along with the revenue. Also, the gross margin of 2022 were 22%, which is not something we need to worry about in my opinion. Scrolling down to the free cash flow, we can see that it's falling since 2020, and in my opinion, this is the reason that makes this stock undervalued, because a company is worth how much cash they generate, and it's not measured by the net income because the net income is not the net cash generated by the daily operations. I think that many investors look at this chart and put some probability that the free cash flow will continue sliding down in 2023, so they pay less for the stock. But there is a good news in 2022 annual report, and it's mentioned here in this highlighted part. The management is saying that they are anticipating their ability to generate cash will increase because their capital expenditure will decrease due to reaching their dedicated C-band spending program. So if we trust the message that the management is conveying in this paragraph, then we can conclude that 2023 will have a better free cash flow results, which in my opinion will translate to an increase in the stock price. Going back to the annual report, we want to measure the company's solvency, which basically means we want to see if Verizon can meet their long-term financial obligation, and we do that by looking at the debt. The total debt is stable since 2016, and it's about 43% in 2022. Scrolling down, we can see that the company made 14 times the interest expense in 2022, so in other words, Verizon can service its debt easily. Moving on to the outstanding shares, unfortunately the company is issuing some more stocks every year. Since 2016, they increased the outstanding shares by about 3%. The next thing we want to check is the dividends, which many of us like to have in the stocks we invest in. And as you can see, Verizon is a dividend company and they are increasing their dividends every year. An interesting observation that the current dividend yield at the time of recording this video is about 6.56%, which is in my opinion a high yield that makes this stock very attractive. At this point, I think we have a good idea about Verizon's financial situation, and we can move to the forecast part. To value a stock, we need 5 keys, and they are all about 2023, and they are the revenue at the end of 2023, how much of that revenue we are expecting in free cash flow, the outstanding shares in 2023 to find the free cash flow per share, the discount rate to learn the present day value of the free cash flow, and finally, the return on investment ratio. And the return on investment ratio is the only one that you can control because it's up to you and your portfolio of stocks. Starting with the revenue, we always try to know what the revenue depends on, or in other words, what does Verizon have in place that enables them to generate the revenue? And since it's a communication company, the performance of their infrastructure is what attracts more customers, and without it, they can't provide any service. We can find the infrastructure in the balance sheet statement as the property, plant, and equipment, or PP&E. Over here, I'm comparing the annual revenue to the PP&E asset, and the last 3 years, it's between 46 to 47%. To be conservative, we will use 46%. Next is the free cash flow to revenue ratio. As we mentioned earlier, the free cash flow and therefore the free cash flow to revenue ratio are decreasing since 2020, which makes the market undervalue the stock. But the management mentioned in the annual report that they are expecting more free cash flow in 2023. So in my opinion, we should take the average of the last 2 years, which is 12%. Next is forecasting the outstanding shares. We saw earlier that Verizon is not buying back their shares, and they are issuing some stocks every year. To be conservative, in my opinion, we should assume that Verizon will issue about 0.5% of the outstanding shares. The next item is the discount rate, and we will use 4.39, which is the interest rate for 1-year Treasury bill debt security. If you want to know where to find this rate, please watch any of the previous intrinsic analysis videos that I posted before this one. Finally, each investor needs to decide the appropriate return on investment ratio. We will start with 6.56%, which is the dividend yield we mentioned earlier. So in my opinion, these 5 forecasting keys will give us about $141.5 billion in revenue and about $17 billion in free cash flow, which means $4.02 free cash flow per share. Discounting the free cash flow per share by 4.39% and using 6.56% return on investment ratio, the stock intrinsic value is $58.65. The current stock price is $39.48, which means it's undervalued by about 33%. Now, before we get so excited, we have to remind ourselves that it's possible that the free cash flow will continue to go down in 2023 and the stock loses more value. So we should adjust the return on investment ratio to include this risk. So if we change the return on investment to 10%, then the intrinsic value of Verizon stock is $38.47, which is overvalued by about 2.5%. In my opinion, we can say that a 10% return on investment and 6.56 dividend yield for a stock of an established, mature 500 Fortune company is an interesting opportunity. And if the free cash flow increases in 2023 as the management is expecting, then it is possible that the stock price will grow more in value and possibly reach $50 a share, which means about 26% return on investment. Before ending this video, I want to thank you for supporting this channel by watching this video to the end, subscribing, and liking this video.